Just there we go. That'll do. We're gonna get in today's trading, mate. So, deposited 500 over the weekend, bringing the balance up to 6,400 and something. And today took 2 trades, 1 stop, 1 break even, but because of spreads, it was a little bit more than break even. And yeah, I mean, to be honest, this is my last trades of the year. We're just gonna take the rest of the year off, just call it. We're gonna go through the moves. So my trades today were on the S&P, and pretty much I've been not testing out, but I need to do some more back testing on a new strategy. So I will do a video of me back testing it. I did a little bit last night for like about 40 minutes. But today I even said to myself today, I was like, right, I don't need to trade for the rest of the month, and today has now confirmed that I'm not trading for the rest of the month. We're just gonna call it to the new year, and just work on adapting this. So I have then got in the bag 2 different strats that I can take. The first being the model, which is the previous daily high, previous daily low, break, inverse, fair value gap. That one I've been trading for the last few months, and then also hopefully this one, if it's good enough. So, I'll be back testing it for a while just to see if it is actually profitable. It can be quite simple from what I've seen, and risk to reward is a little bit better, and it's basically taking the let me just take this off here, previous daily highs and lows, so we can see charts a bit cleaner. So what the model is, this new one. So I want like a bit more of a short term strategy, so it aligns more with my personal patience, and so I'm not having to hold trades like through multiple days in order to hit like a 2 to 1, 3 to 1, and instead it's more like a session trade at 9:30. So pretty much what the model is, it's you take the high and low of the first 5-minute candle. So 9:30 to 9:35. I mean, I think I've actually done it wrong today, and that was my mistake. So yeah, like I say, like one trade on this. So we got 9:30 here. 1, 2, 3, 4, 5. So the highs and lows are there marked out, and pretty much what you're waiting for is a break in either side, and then a fair value gap to form from that break, and then you wait for a retracement into that, and then an engulfing candle to confirm the bias, and you enter long there with a fixed 3 to 1 risk to reward. There is different variations of the strategy. That's the one that I tried today. Fortunately, due to spreads, especially on the 1-minute chart, my 3 to 1 went down to 1.8 on the first trade, and this one was more like a break even trade, thinking that if price wasn't gonna come down this way, it would come up that way, which unfortunately it has over here. It just needed one more sweep. So quite a few things to take away today. I'm not bummed out about it. We took the 2 trades. There you go. There's the P&L for the day. Minus 12639, 2 trades. That top one is the break even. So this one here, and that is the stop there. So yeah, it was reduced risk just because we are on the lower time frame. And I've been trading this other model for so long that I sort of gotten used to that. I was using AI for a little bit, and yeah, I think this month it's been very inconsistent, and that is literally reflecting of me switching strategies, and just trying to figure out something that works a little bit better for me. And yeah, I mean, it is what it is. can't really say much else about it. So in terms of my actual entry for this first trade, before we get into it, what I'll do is I'll look at the 15-minute here. We were above previous daily high, and I wanted to use the London low as a draw with the Asian low. And unfortunately, NASDAQ took that and created an SMT, and then price moved up. NASDAQ was a bit more bearish, whereas you can see here the SMT was more bullish on the S&P. So that's something to take into consideration as well. And yeah, so price did end up running after, I think, when did it start running? 11 o'clock it made that run, which is something I've noticed recently towards the end of the sessions. It tends to break out or, drop down at the end of the session rather than during the session. And yeah, it's just something to consider. Maybe need to just keep an eye on that, because yeah, it's just something that I've been noticing recently. And yeah, that's it. Just need to keep an eye on it pretty much. See what we can do with that. Maybe alter my timing of entry just so I can wait for all the initial chop. Today was a no news Monday as well, as you can see. Oh, bright, mate. No news Monday, nothing. Tomorrow, 23rd. So there's just no need, absolutely no need to trade for the rest of the year. Nothing going on. No point. So what I'm going to do in my time off is I'm going to do a bit more backtesting on this new model. There was another variation of it as well, which was you take the first 5 minutes and then you're looking for an inverse fair value gap, price to trade into that, and then reject off it or continue off it, and then you enter on the retracement to target, previous session highs like Asia high, Asia low, London high, London low as your draw. That was what I was backtesting last night. So really, this was completely new, and I shouldn't have done this today. I really shouldn't have done this today. No live testing on it at all or anything. So it's just pretty much blind, and I got stopped both ways. So it is what it is. We learn from that. And yeah, so pretty much the entry was this. So we had our 5 minutes, that's this low and this high. And then from here we had a 1 minute fair value gap. We also had a very small one in here. You see 1, 2, 3 candles, retracement. And then I took this as the engulfing candle, but it's not an engulfing candle, is it? It's just not. Some entry was here due to spread. And stop is basically just above the engulfing candle, which isn't there. Sounds stupid when you speak about it back, doesn't it? No wonder you lost. And yeah, so we were just targeting, well, this would have been a fix 3-1 if the entry had been right. So my initial, I didn't realize how big the spreads were going to be. So if we got in here on this retracement here, I wanted to get that on the wick, but it put me in down here instead. So yeah, something to consider. Obviously 1 minute spreads are a bit looser than say a 5 minute spread. If you're looking at that, it's a bit more difficult to judge. There's more noise on the 1 minute chart, but it's something that I'm going to be practicing and developing over the next few weeks. And just need to collect more data on it, really. So it's one of those. I think what I'm going to do is I will work on this strategy on FX replay over the next month or so, and we'll have a look at how it plays out and the results we get. So in terms of the back testing I did last night, I took 2 trades. The first one was a banger. We look at the summary. Yeah, so the first one, so the first one was like, how do I view that trade? That's what I need to know. Journal, there we go. Right, so the first one was a 5.59 risk to reward. on this, and you can see we got 930, 1, 2, 3, 4, 5, broke upwards from there, and then the inverse fair value gap formed, retraced into that, pushed off, and then we entered long here. I'm not sure how do I go to the next picture? Whoops. Yeah, so every time I go on this, they move stuff around. Maybe escape. And then, yeah, you can just see that was the full TP there. That's what it looked like above the previous daily low. So maybe aligning, daily draws with this strategy after we swept the London low, and then came up to target the London high. As you can see here, you draw that across there you go, bang. So this is what I mean, little kinks that I need to just find within this strategy to identify where the results are going to be the most profitable and the most high probability trades. You can see I'm like, this is on a $10,000 demo account, which is equivalent to about 7.5 thousand pounds. So I'm nearly there pretty much. I'm on about, if we converted it, it's something like $8.3 thousand on my live account from GBP. So the next trade was, how do we go to this next one here? Bit different entry, targeting London low, inverse fair value gap created between the 930 and 935. Been traded through and went to take a short off the rejection of the accumulation. So you can see here, can I scroll up a bit there? No, apparently not. Either way, the stop was above that inverse fair value gap. We traded up through it, accumulated, rejected off it, and then I went for the retracement here, and that got stopped. So if we look at, why can I not, what is going on here? Not sure why I can't view the full screenshot, but that's not ideal. But yeah, you basically see that come back. News drivers are 8:30 and SL hit at 10 a.m. So wasn't full model entry off the inverse fair value gap target, looking at a 15-minute price, hovering above the previous daily high rather than the middle of the range. And on the 1 hour, it looks like there's still room for further upside movement. And that is this candle here, and that is this fair value gap that I'm referring to. So bit off topic on today's trading, but just little things to mention on what I need to be looking for my own knowledge, my own data, and refining this in live markets going forward so that I can make the most out of it. I do kind of prefer that inverse fair value gap method, purely because my other model uses the inverse fair value gap as as like a part of its entry criteria. Like you can see here today, we've got 1, 2, 3, 4, 5 minutes, tap back into that, and then reject off that. So the entry could come here, and then you target the Asian low. So that would look something like what? We go short here. We could say the volume imbalance is the entry, put a stop above that, target the Asian low, and then you go 2.2 to 1. So 2.21 to 1, and that would have been nice. But then again, also incorporating SMT, see which market is more likely to move in a certain direction, which one's more bullish, which one's more bearish. And yeah, so that's the first trade and my back testing so far. The second trade, I was looking at more, I don't really know what I was looking for here, just sort of chasing a loss, I guess. So yeah, the psychology has not been perfect or not been great in the markets this month, but you know, it's part of the learning process, and something that I'm looking at consistently. When I'm gonna sort it out, time will tell. How many losses do you need to take? How many wins do you need to take? But then again, you can't fully put it all down to that. You can also put it down to the fact that I was just being silly, trying a brand new strategy live in the markets on live funds. Obviously, your psychology is going to be a bit skewed. You're going to be nervous, not full conviction. And without the data as well to confirm your strategy works, it makes a lot of sense that today was a losing day. So in terms of this, I think it was this second one. Is it 5 minute? I think it was a 3 minute inverse that I was looking at. Yeah, 3 minute inverse with the retracement here, break up, and then, you know, we got this wick. We traded down, entered long here. Original stop was here. So price almost came down very close to taking me out, and then we got this push up, and I trimmed the stop here so that the trade was then 8-1, and it was about £15 stop loss from like £100 or like £90. Let me just check actually. So I think it was like 40 units. So it looked something like that, the trade, and that would have been enough to cover my loss. I was also conscious of this imbalance here. So on the 5 minute, was it 5 minute? No, it's 3. No, it wasn't. Where is it? Basically this little gap. Where are we looking? This in between here. You can see prices trade up into there and then just stop me out of break even. At this point, I was at break even, and it should have been, you know, plus £1 profit. But because of spreads, I got stopped out for minus £14 there. So it would have been just as if my trim stop would have been hit. In terms of trailing or floating profits, this ran up to 104. In hindsight, I had the opportunity to close it there, but yeah, I was expecting price to come up further, and I think it's just one of those, like, I could have done, I should have done, but I also wanted to follow the plan, which wasn't fully in place. You know, I was anticipating price to come and run these highs before sweeping me out, and then come down, pardon me, and then make its way up towards the session high, considering that the Nasdaq had already taken these two lows down here. And yeah, it is what it is. So in terms of pips for the day, we are at, second trade was, if it wants to load, just waiting. I might just close the app quickly. Come on now. Okay, so it doesn't want to load. Okay, so the second trade was 5 pips, and the first trade was 30 pips. So 35 pips only because it's on the S&P and not Nasdaq. So if that was a Nasdaq, that would have been 350. And yeah, minus 126.39 on the day. So yep, that will do me for the year. Like I say, I'm going to do some back testing videos in the meantime until we're back in the market, just so I have video data of my trades, because as you can tell, you know, it is good having these screenshots and this and the notes and stuff like on your trades, and you can see the percentage and everything that you would possibly need. it is also helpful just having video recording of that. I also tend to know, well, I've noticed I tend to be more responsible when I am trading on video rather than just sat on my desk at work. I tend to make the right decisions, or tend to make better decisions even, just because the video holds me accountable, and you don't really want to fuck up on video, even though it happens. But yeah, as you can see, probably got lucky on this first one, but at the same time, getting that with a 5.5 to 1, 5.6 to 1 even on the first trade is still a good sign. And yeah, it's mainly, yeah. Take a step back a sec. As I say, it's mainly, switching between strategies. The use of AI that I was doing last week sounds good, was good, but, as I found, it's only as accurate as the information you provide it. And when I'm at work, it's a bit more difficult to be more accurate because I'm obviously doing stuff in between, and I can't just be staring at the charts whilst trading. So I can't provide accurate enough information for it to be reliable. I didn't like the inconsistency of the trades I was taking, and realistically, I need to get back to more structure with my trading because my results are showing lack of structure, lack of discipline. And, we've gone from being up this month in the green by like 100 and something pounds to now being down like 110. So it's one of those, we'll just take all the lessons that we've learned, roll them into next year, come back better, come back relaxed, come back focused. And yeah, I think that's pretty much what there is to say about it. And yeah, like I say, these are my last two trades of the year. So what I'll do is I'll make some backtesting videos, and I'll also do a yearly review so we can have a full review of all my trades taken, not all my trades taken, but like the general P&L for the year, what months worked well, what months didn't work so well. Take a look back at different stages of my trading throughout the year. If we look back at the start of the year, my trading colors used to be like gray, blue, and black on the charts with a different indicator. And it wasn't until about halfway through where I switched to this, and I just tidied up the sessions a bit more, so it's a bit easier to read the charts and just make more informed decisions. We'll look at when I started implementing the model, how that did, which was unprofitable because of my execution and my psychology in the live markets compared to backtesting, which is completely understandable and expected. The results are not going to be as strong because you're not in a simulated environment, you're in a live environment, live capital. Your mind is going to work differently. And yeah, with all that being said, I think considering this has been my first year properly trading the live markets, I've not had any major spirals where I've completely blown the account. I have been depositing into it and topping it up each month just to build up my equity. And yeah, as you can see, we're almost at $10,000 balance. So going into next year, we'll just continue to build it. The risk to reward will ultimately do the heavy lifting, the risk management even. And yeah, I mean, it's a difficult game to do, and the first year was red. So we'll take that and we'll learn from it. With all that in mind, I think that's going to do it for me today. I keep repeating myself, backtesting videos and a yearly review is going to come before the end of the year. And if it doesn't come before Christmas, have a Merry Christmas and all of that. So with that being said, I'll catch you in a bit, mate.